My name is Terri Ruby, and thank you for dialing in or zooming in this afternoon. I was asked to speak on behalf of the PPP forgiveness, and we talked about doing this a couple months ago. And I said, oh my God, things keep changing every day, that maybe if we do this in December, we'll have all the facts. Sadly to say that still changing, but I'll give you what we know. Let me give you a little bit of background too, is that you got a little bit of background on me personally at Blue Ridge Bank, but history on Blue Ridge Bank. Blue Ridge Bank has been around for 127 years. It's a community bank based out of Luray up in the Shenandoah Mountains. And we have a very young CEO who just turned 41. And his strategy for growing the bank organically was to pick the cities and areas that seemed to have had all the community banks gobbled up, and it would be a good place to call home. So he's expanded it from the Shenandoah Valley area in Central Virginia to open up offices in Charlottesville, Harrisonburg, Greensboro, Hampton Roads, and Winchester. And really the only gap we had in between is the closest location to us in Norfolk would be Charlottesville. So there's about a 3-hour gap and a lot of space in Richmond that we will be covering soon with our recent acquisition of Virginia Commonwealth Bank. If anybody's familiar with that, there's 2 locations, Virginia Commonwealth Bank and Hampton Roads in Virginia Beach, 1 in Suffolk, but they have 17 locations. 15 of those are all in the Richmond area in Northern Neck. So that'll fill in a lot of the gap. I was lucky enough to be selected to open the first office in Hampton Roads. I'm in downtown Norfolk. What seemed awful lucky stopped really quick with the coronavirus. We basically opened our doors by the end of last year and then got hit with the coronavirus. But what seemed to be bad news for us became really good news for us in our businesses, because we bunkered down, and all we did is PPP loans for the first, I would say, 3-month period between March and April. So let me give you a little bit of background and history for those of you that don't know with the PPP what started this. But on March 27th, 2020, the president signed a Coronavirus Aid, Relief, and Economic Security Acts to provide emergency assistance. And part of that program was for the Paycheck Protection Program that allowed businesses to apply up to 2.5 times their monthly payroll expenses to help keep people unemployed. The original program, which it's totally been uncharted waters and have changed frequently, which has made it frustrating for both the businesses and banks to try to keep up and try to do it right. But it originally allowed for an 8-week period of time to use the money, allowing for full forgiveness as long as 75% of the money was used for payroll and no more than 25% were used for other expenses such as mortgage, interest, rent, and utilities. That was later updated to go over a 24-week period of time, and it requires only 60% be used for payroll. Many banks, particularly community banks, stepped up and into action. Banks that were already SBA lenders were able to come quickly. Our bank immediately went into action. Instead of designing an SBA team, all of us were hands on deck, helping communities and their businesses be able to get back to business. There was probably a lot of strain for businesses getting help if they were at a larger regional or national bank, because just the number of their clients. And we actually got a lot of new business, and a lot of our old friends, came back that we worked with at former banks because they weren't able to get that help quickly. And the big fear is that the money was going to run out for the first set, and it did. Blue Ridge Bank, it was our only focus, and we processed 134 loans in 31 days. And that was just 2 employees. It was myself and Christine, and we just worked straight through, didn't take a day off, tried to get as much out as we could. And the good news is everybody that applied for the first round got the money. We had more that came back second round, but Blue Ridge as a whole provided $362 million in PPP loans to businesses. So now talking about the piece on forgiveness. This is just as challenging as the rules and updates still continue to come out. For our area, just to tell you what type of experience we have, and I'm sitting here and you can see me, but you can't see Christine and Kathy, but those are the true heroes that are doing the forgiveness piece here. So we've gotten our feet wet, and I'd say we're up to waist length in water, trying to figure this out. But we have a total of 181 businesses that we're working with that have applied for forgiveness. We have 77 completed applications. We've submitted 57 applications to the SBA for forgiveness. And so far, we've had 17 that we've submitted to get full forgiveness, less if they have EIDL. So, we have a confidence level as that what we're doing on the forgiveness piece is, working. We think we're doing our best to make sure that we get the documentation required. We expect that forgiveness, if we're putting in saying we've reviewed all of the documents that we need to review, that they're not reviewing them at the SBA, they're turning around and they're sending the money to us by ACH. We get notification when they've received the package, they've approved the package, and when the payment's been sent. Once the payment's been sent, we reach out to our businesses and let them know the good news that the full forgiveness has come in. And like I said, so far, everything that we've submitted, we've gotten full forgiveness, other than if there's an EIDL balance. To share that there are 3 different applications out there. The first being the 3508 for loans 150,000 and above. The next application that came out is the 3508 EZ, came out for 50 to 150,000. And the final form that we got was a 3508S that was provided for 50,000 and less. There's been some talk that 50,000 or less, there wouldn't need to be any documentation, but we're getting documentation, and the application does ask to provide payroll records. It's just the last one being the simplest form, requiring the least amount of documentation. Many banks, including our banks, not necessarily Norfolk, because we've just reached out to everyone that's on our list, have been holding off on forgiveness applications for 50,000 to 150, because we hear that that's going to be further simplified. We don't have that yet. We just hear a lot of information. We're trying to do the best things for our businesses. A key factor to clients getting their loan forgiven is if the bank stuck with the guidelines on calculating what they qualified for a loan. So, banks that seem to ask for documentation, make sure all the I's are dotted, the T's are crossed, are the ones that are really looking out for you should you get audited. We've gotten all of our own back, so it's been, pretty easy to do those, but we have had people call us from other banks, and they were allowed to use some things in the amount of money that they got for the PPP that is not being forgiven. And, you just got to realize is that, if you follow the rules to your best of your ability on what you could qualify on the front end and what you're able to get back, it's been a pretty clean process. The PPP loan, originally, the banks were asked to provide notes for a 24-month loan for anything that was not forgiven at 1% with 6 months deferred. And this was later changed to 60 months. But if you were on that 24-month note originally with your bank, it would be up to them to modify that for you. The PPP Flexibility Act extended the deferral period until the SBA provides forgiveness or forgiveness decision, or 10 months after the end of the borrower's coverage period. And there's a lot of information out there that we've heard that is not necessarily true, is that you have to apply for the loan by the end of December 31st, get your application in. And that's not the fact on the forgiveness piece. The forgiveness piece, you have to have it completed within 10 months of the end of your coverage period. And at the end, I will, I just saw a note from somebody, eating, I will get on when done. But, at the end, I'll take questions. And also, too, if I don't know the answer, I'm not going to guess. I'm going to get your name and information, and I'm going to find out and get back to you, and I'll email the answer to all. Because like I said, is that the information's been hard to keep up with, and there have been a lot of changes. We're doing the best of our ability. And like I said, the best thing I can use is experience on what has worked really well on the forgiveness. Most banks will ask for your payroll records, And if you have reports from a payroll company, you're in good shape. You use somebody like Paychecks or ADP, they're already pre-prepared to give you what you need. If not, we're collecting things such as internal records, such as QuickBooks. You know, there's been a lot of question and a little bit of dismay about owners' compensation because there's some little bit tighter regulations on the forgiveness on that piece. So what we've asked for is for the owners, we have to collect their W-2 for 2019 to show what they've earned. And I'll go into that a little bit further in just a minute. But so we've collected that. We've collected utility bills for which include power, internet, water. And we've also accepted checks that was made payable to Virginia Power. And why we collect the bills is because it's really important that that bill goes to your business and not some other place. You know, we're lucky we deal with really good businesses that don't try to get by, you know, with much, but you want to make sure that you have that information to be able to provide the utility bill. We ask for checks made payable for rent and possibly a copy of your lease and a mortgage bill to verify interest. So we do everything possible to make sure that we verify what you have. You know, most of our businesses have been extremely grateful because, you know, what everybody's concern is that they do this right, they get it forgiven, and in the case of the audit, that all of that documentation's been taken care of up front. But I want to talk about the owner's compensation because that's capped a little bit differently than just people making more than 100,000. The owner's compensation is the same as anybody making over $100,000 for an 8-week period, meaning that maximum forgiveness is $15,385. And if it's over a 24-week period of time, owner's compensation is capped at $20,833. And for an employee making over $100,000 is capped at $46,154. And like I said, it requires 2009 payroll numbers for the owner because they can't get more compensation covered that they used their money for in 2020 that they did in 2019. So if an owner made $65,000 in 2019, but they made $85,000 in 2019, they're going to be capped at what they made in owner's compensation in 2019. All right, other things I can share is the banks have 60 days from the time that they receive your application to process it. So once you hand it in, they have 60 days to get it processed into the SBA, and the SBA has 90 days to process and get it back to you. You know, the only other things that I can share, and like I said, I have as of October 7th, 2020, directly from the SBA facts, and it's questions and answers, and it helps a lot if you're trying to look at 8 weeks, 24 weeks, what you can include if you're a seasonal employee. We haven't had to work with anybody that's a seasonal employee yet, but we expect the change is still going to be changing, including how the funds will be taxed, either directly or indirectly. So that part, you know, we don't give any advice on. We say talk to your CPA, but that's something you do want to talk to your CPA about, is how this is going to impact your taxes for 2020. At one time, the talk was it was going to be taxed as income for your business, which really would have been hard. I mean, it really would have put a burden on the business. Right now, it has been set that it will not. It's not going to be considered as taxable income, but the IRS has declared that no tax deduction is allowed for an expense that is otherwise deductible if the payment of the expense resulted in forgiveness of a PPP covered loan. And the position is that allowing the deductibility of expenses paid with PPP funds would result in a double dipping scenario. That could change as well, because right now there's been a lot of counter argument to that, is that, you know, that there shouldn't be penalty on using a PPP fund or, you know, reduction in deductions.
Hey, Terri.
Hey there.
Hey, mind if I jump in? I think everyone would be interested in this. I had a conversation with Ali over at Jones CPA about this.
Yeah.
Probably about a month ago. And I told him that basically what you just said. and it sounds like we're not going to be able to. Basically, we're going to get taxed on the income. And Ali's position was he's 95% sure that it's going to change, that it will not be taxable, that business owners are going to be in an uproar because the rules have changed.
Right.
Because originally it was supposed to be completely tax-free, and now all of a sudden indirectly it's taxable. And he felt very confident that this would get changed before taxes are due. I was surprised to get it.
And you know what, and that's where it's just been really tough, Eric, is that what they think's going to happen. How do you know when we've never been through it before? Now I can tell you, part of the reason why banks and we're trying to slow down on between the 50 and the 150, because if the facts change and it becomes better, at first the goal was just let's get this money out as soon as possible because it's going to run out, and it did. But then after that, we started looking at, if you got your loan, you were one of the first in line and got in the first 30 days, you were on a 2-year note and you could only spend it over an 8-week period of time. And then of course that loosened up, more money came out. So, there's things that we're hopeful, but it's really interesting in what's been improved or not. At one time, one thing that helps us is our CEO is a CPA, so he's watching it pretty closely. We're very careful to tell you to talk to your CPA, because just like, the information you got was 95% sure, you don't know what it is. They have reduced it from saying you do not have to put it down as taxable income for the year, but they're just not allowing you to deduct some of the expenses. The CPA that I work with, he's in the same opinion as your CPA, that there's too many people that are fighting that right now that they're going to change it. So we'll see.
Yeah, I don't know where this fight is happening. If I did, I would be in on it.
Yeah.
Sure. Whoever's fighting for us, I hope they win.
Yeah. Well, it's the CPAs out there that are fighting for it for their businesses, which is nice. Same way, banks go up to Capitol Hill and they fight for their businesses. CPAs are out there, for the fight.
So yeah, the impact for us is so Ali's created 2 tax projections for me.
Okay.
And there's a sizable difference between the 2.
Yeah.
So it's a lot of money at stake here, and that's just for me. Never mind the millions of other business owners that have received.
Well, and I'll also tell you something else to prepare for too, is that, like I said, so far we've been really lucky. The forgiveness has come back. It's paid people off in full. The only thing that it hasn't paid off is maybe the EIDL. And most banks are going to reach out to you and ask you if you will just pay that back. Okay. Because even though you have this nice note, this is 1%, it sounds really great. Banks are asking you be just as kind with them as they've been with you on the front end. No banks really want to hold on to a 1% loan. And of course, a business is going to say, why wouldn't I want to take a 1% loan? But what you could get stuck with is a pretty high payment that has to be paid out during a certain period of time. If it's 60 months, not so much, but value your relationship with your banker. If you can do it, I would do it. If you can't, you need to finance it out. But I think we're all in this together. It's what's best for all of us. Who else out there has some questions that maybe wanted to unmute?
Yeah, thank you, Terri. It's really good information. I appreciate it. You mentioned that having the EIDL loan has an impact on PPP loan forgiveness. Can you explain?
Sure. So the EIDL loan, you get a $10,000 up to $10,000 grant. So we have businesses say that got a $100,000 EIDL loan. They're only required to pay back $90,000 because the first 10 was a grant. But what they've subtracted that off of, if you have a PPP as well, that $10,000 from the PPP end. So if you got a $100,000 loan, you're paying $90,000 back. You got a $50,000 PPP loan. They paid back $40,000 of the 50 that gives you a remaining balance, because they just gave you $10,000 on one end, so they're not going to give you credit on the other.
And is that happening? Is that consistent? So is that
very
going?
Consistent? Very consistent. And how it happens, and most of the time when they fill out the application, the businesses have to put down, did you get an EIDL loan? And all of the calculations for us, because we purchased a program that everything's done online and it's done through the portal. is that you put in there that you have a EIDL and then it'll calculate $10,000. But I can tell you is that if it's not disclosed, we saw one that came back, the money came back and the borrower didn't put an EIDL, but it came back $10,000 less because of that. Now, some of the EIDL loans, you know, it just depends on how much money you got on your EIDL and also the PPP. Very consistent.
And then what are the benefits and or detriments of applying for forgiveness for the PPP now? You know, is there any benefit to applying for forgiveness or waiting? I mean, what are your thoughts, recommendations?
You know, my thoughts and recommendations, knowing that you don't have to do this by December 31st, make sure that you at least take the time to figure out what your coverage period is that you're going to be using. So if your coverage period, you know, you got, and the coverage period starts the day that you got your money. So if you got your money on June 1st and you're going to pick an 8-week period of time because your payroll is going to cover, you use it all during that 8-week period of time, then know that 10 months after that, you have to have this done. So at least know, you know your parameters. You know, most people are going with the 24 weeks. The other, if you're going for the 24 weeks, make sure that, you know, I would wait it out a little bit, you know, stay connected with your bank to see any updates that they're sending, sign in if you need to sign into anything. And then the other recommendation is just really focus on the payroll that you have sent out. Some people have sent us, you know, their PPP loans $100,000 and they want to send us $150,000 worth of documentation to show what their mortgages or, you know, in mortgage interest is or rent is or utilities. When if your payroll covered that in itself, covered your forgiveness, just stick with that. You know, be prepared. You know, it's not like on the front end that you had to rush that the money was going to run out. Be prepared. Don't do it late, but don't feel in some rush to get it done by year end. Just start collecting your records.
Okay.
I got a question. If I had it to where originally it was the 8 weeks, right? And if I had it, I could get rid of and stuck with the original plan. You had bills and everything, and then salaries. But if I pushed it out to where if it's just salaries, like you just said, and pushed it out an extra couple weeks or maybe a month, would that be a better option to say, like, look, I just spend it all on salaries? Or,
I think so. I mean, like I said, I've got the team behind me that has the better knowledge. I take the 24 weeks if you can cover in 24 weeks. You know, you have 2.5 months was what you were allowed for your PPP. All right, and they said you can spend that 2.5 months in 2 months, in 8 weeks, and you can use the extra money for mortgage interest. Now that you still only got 2.5 months worth of payroll for 2019, I would think the better option for almost all would be take 24 weeks. Okay. You should have enough payroll that can cover the 2.5 months of 2019 and be done with it.
Yeah.
That's a real clear cut way on having it forgiven.
Okay, cool.
And it helps too, particularly businesses that are seasonal and during that next 8-week period of time from when they got their money, they weren't open or they were at such limited staff. And then you add in, and we've got, you know, a lot of people that their employees didn't come back because they could get more in unemployment during that time. So take that 24 weeks. Anybody else have any questions?
Can I ask a simplified question?
Sure.
So if we only use the payroll, like you say, it seems that if I had the 3508S form, I don't use paychecks or anything, just straight QuickBooks payroll, quarterly summary, the 941 for the 2 quarters. And I guess maybe monthly statements from the bank that I had checks paid to people. Is that really all the stuff I need to submit?
Everything, if you have everything that you just mentioned, it would be yes. And the one thing that could be different is that I'm talking to you from my bank and what we're collecting and what we're using. You know, we're hearing from other banks, some either are asking for more or less because they're guessing like we are as to what you need. Now, a lot of the application will say what you need to provide, but if you've got QuickBooks, you've got 941s for your first 2 quarters, you know, for owner's compensation, you'll have something for 2019, like your W-2 or something that'll show your income. And then, I mean, I think that's about it. Any type of payroll reports, QuickBooks, checks written, you know, we're able to use if somebody is, you know, sole proprietor on what they paid themselves. Is it a check or a deposit to their account?
Thank you.
You're welcome. Anybody else? All right, well, thank you so much for participating. And like I said, I'll get every one of your emails and I'll send you an email with the facts that we got as of October 7th. And you'll have my contact information. So, feel free, even though you're not filing with us, if there's anything we can do to help you, we're happy to.
Actually, I did have one question. I just want to, I'm not sure if I caught this correct. The EIDL loan, it was 3.75%, but you were saying 1%. Did it automatically get reduced like for everybody?
EIDL, you apply directly through the SBA. All right, so you're paying directly back to the SBA. All right, when it comes to the PPP, those were administered by your bank under the SBA regulations. The SBA regulations were that we charged no more than 1%. So those are two separate loans to two separate people you have to pay back.
I have heard from another business owner that they were able to convert their EIDL into like a different kind of loan for a shorter term, but at much less interest rate. I forget the details. Does that ring a bell at all?
Well, and I don't have as much information I can share with the EIDL because we didn't administer it and it was directly through the SBA.
Oh,
So,
okay, gotcha.
Yeah.
Okay, understood. All right. Thank you.
You're welcome. You're welcome. All right, guys, you have a wonderful afternoon and thank you so much for participating.